Options Center. It's a weekend edition here, folks. Thanks for joining us. If you have not subscribed yet, please do if you're new here. We have lots of great information throughout the week. Also, we have a Patreon. It is $5 a month for the lowest tier. If you're interested in this information and you like this and it helps out, then please consider joining the Patreon. Also $10 for trade alerts and trade education. So we have a lot to go through. We're going to go through SPX on multiple time frames. We'll check out traditional. I want to take a second out to actually describe what we do here, just in case you're new. I'm a technical analysis. I don't go through any fundamentals whatsoever, and I use layers of styles of technical analysis. So we're going to go through Elliott waves, MACDs, MAs, RSI, levels. So there's a few things that we do in order to confirm what we're looking at, our thesis, and where we think the market's going to go and head each and every week, month, day, hour. Okay, so let's get into it. We do have we'll go through SPX on multiple time frames, check out SPY and the VX, and we'll stop it there with the options expected move for the SPX, and then we'll go on to the Patreon additional information with QQQ, RTI, IWM, MQ, and then what we're going to learn on Apple. What we can learn, we're going to start doing some lessons on when we talk about something, how we learned off of it, whether we were right or wrong. Okay, let's jump into it. SPX on the weekly. I have this moved out so we could see that wave 3 had ended up here. Wave 4 down, and we're working on wave 5. So this is our primary wave 5. Our intermediate wave 4 would be intermediate wave 1 down to 2. Let's jump in here up to 3. We think 3 had ended at this point, and now we're working on wave 4. We do have a target, a final target on a big time frame of 38.2 retracement, which is pretty typical for a wave 4 pullback, and that's around 4,040 area. That coincides with the 50-week MA and also the rising pivot that was from the megaphone originally from the wave 4, the wave 3 to 4 pullback. So as you can see here, we have a lot of support in between. We are testing. I'm going to get in a little bit closer now. We are testing the 8 EMA. We lost trend from the Corona crash. We're testing the 8 EMA, so we may possibly get some sort of bounce at this point. If not, we're headed down lower. We have the 20-week, a rising pivot, then our target down low. So nothing heads down in a straight line unless the Corona crash didn't really, but it seemed like it though. When you're going through it, the huge bounces are so fast and then so quick to go back down. But we're not looking for a straight line. We're looking for some sort of, and we'll do this on lower time frames, but we're looking for some sort of something opposite, an alternate to this wave 2 zigzag. So we can't have a zigzag here if this is a actual wave 4. This was pretty shallow, so we're looking for something a little bit larger, which would definitely be completed with the 40-40 area. So possibly a I guess you can call it a double zigzag or a WXY. I'll show this on the daily time frame. So as soon as we get through the MACD and the RSI. So checking out the MACD here, we started to cross down, making a lower low from this point. That says to me that we're starting to make a high, a low, a lower high, and now we're starting our lower low. And that is a bearish indication that we are actually starting our descent and that the bearish divergence is commencing. Which is kind of the title of this. Our pullback has commenced. So we do believe this situation is happening. Same thing with the RSI. We looked for that lower high, low, lower high, and we're not quite to the lower low yet, but we are descending at this point. So we're looking for confirmation. We have not gotten that on this time frame yet until we break down from the 8 EMA. So technically, we're still in a bullish stance, but our projection is playing out. We had our candle, our reversal candle, and that was confirmed from a bearish engulfing candle after that. So you have a bullish engulfing, a hammer, and then a bearish engulfing, which is a reversal pattern. So looking good for you bears out there at this point. Let's go down to the daily. Now, daily trend is our friend. We're going to get a little bit tighter in here and show what we're talking about from the Elliott stance. So we had our wedge. You can call this a wedge, but it was also a ending diagonal. So that ending diagonal started here at wave 1, 2, 3, 4, and 5. So this is the throwover that we had above resistance, broke back down. That was our first signal that that allowed us to start our bearish plays. And so we had the throwover, broke back down into the wedge, and immediately retested the 8 MA, bounced just a little bit, and broke down after that. And it was real quick. We actually broke down from the 20. We did have a reaction there. We also had the trend line. That was a big day Friday where we broke all of those. We broke the 8 again. We retested the 8, broke the 20, broke that trend line, and now this wedge itself we're retesting at this point, and we have the 50-day moving average right underneath. So although we may get some sort of bounce at this point, if we don't break any sort of resistance, then we're gonna continue to the downside for some time here. Let's see what else on here. So what we were talking about, the WXY. That would mean that we have a zigzag, so a 3-wave move down, a 3-wave move up, and another zigzag, a 3-wave move down for Y. And this is sort of a projection. We will move these as we enter some of the time frames, lower time frames, and confirm these moves. But this would be my projection. This would be my ideal situation if we broke down to this W and it went right to that 23.6. Also, this rising pivot bounced hard from there, maybe a 50% retracement and or so, and then broke back down to that point, right down to the 38.2. Now, this is just a projection. We don't know if it's going to end up this way. So we want to watch price action. It's very important to watch price action and not just close your eyes and hope. So and that would bring us right down to the 38.2 and possibly the rising pivot from the megaphone. Now, time frame. The time frame, we do think this is going to take some time after, zigzagging down. The WXY is probably going to take, and just a wild guess. Again, this is not necessarily a defined thing, but we're looking around maybe getting to that November area where we'll have our low, and then we'll try to break out of this with a December Santa Claus rally. That would work perfectly with about a 2 to 3 month correction and a nice wave 4, and then continue on for all-time highs moving into 2022. So that's what we're looking at. Now, I do want to say that this wave 1 ends here. So it is possible for a wave 4 to come lower. Like I said, this is just something that we're looking at. If it breaks down from this rising pivot, I think we have a real issue. But, it won't break any technical rules if wave 4 comes all the way down to just above wave 1. But the moment you break this invalidation line, which would be the top of wave 1, then it's a whole nother issue we have here. We might have the actual top of our market and moving into a huge bear market. So that would be the worst case scenario, but we don't think that's going to happen. We'll see if we can get down to this rising pivot, and if anything happens from that point, then we can adjust accordingly. All right, so we had the MACD. MACD, you see the bearish divergence just playing out one more time, and now finally getting real close to that zero line. But technically, we're in an uptrend until we cross down from that zero line. And you know, although we are bearish and looking for a pullback, in the long run, we are still bullish. Okay, same with the RSI, bearish divergence, bearish divergence, divergence. Finally back to that 50 line, and we're actually starting to cross it. Maybe we get a bounce here before moving lower. Possibility. So we are hedged to the upside, but we still are playing to the downside primarily. Moving over to the 65-minute chart. Remember, we use 65-minute candles, so we have even trading candles throughout the day. We're going to go right into that ending diagonal right at the end of wave 5, so we can start to check out what's happening here. So with that last ABC up for the throwover and breaking back down into the wedge, so that would be the end of 5 of 5 of 5 of 3. Now we're going down to begin our descent, and this would be a wave 1 in red, wave 2, 1, 2, 1, 2, and now we're working on wave 3. And the reason why I do think this is working out well is because of the impulse wave 3 that began on Friday and just crept and just ground to the downside, especially at the end of the day. That last candle really started to push, and that was necessary in order for us to actually confirm that this was wave 3. Otherwise, this sort of looked like a just a zigzag, and you know, maybe going to all-time highs again. So so if this wave count is correct, you know, we still have a little bit lower to go. We'll put the levels on. I'll go back over with the Patreons with the exact levels of what we're looking at, but going down to wave 3, pull back to wave 4, 3, 4, and then I don't have the rest, but 3, 4, 5, and then we'll be looking for some sort of maybe down in this 43.71, maybe looking for a bounce there or a little bit before, ultimately, and then have our 3-way move up before making a bigger move down. So that's our wave count at this point. That could change at any time. So please, if you want these, you know, these counts and information each and every day, please join the Patreon. Check it out. We want to move on to the MACD. And checking out the MACD is just falling. It's just falling hard. That's just, you know, it's coinciding with this impulsive wave down. And we'll probably reach, as we get to these 3 4s, we'll start to get a little bit of bullish divergence, and we'll let that build up before we get that nice bounce. And we will play the bounce at that point. RSI. Already getting to the oversold area. Again, there's no bullish divergence yet, but you know, this can go even lower, maybe down to 20 area, and then start to create some bullish divergence as we get through these 3 4s on the minute level before we actually have our nice big bounce. All right, let's see. We're going to move over to SPY. We're going to go into the daily on the SPY just so we can see some of the a different point of view. It's always nice to look on SPY and ES for a different point of view. Also to see the volume that we had. This last candle that on Friday was just a huge increase in volume, a big spike. So you see, as we started to descend, the volume was increasing and then finally spiked at the end. I don't think that was a you know, an ending spike there where you know, everybody was what's the word, oh my gosh, not consolidating, but capitulating. So I don't think that's a capitulation type rise in volume. I do think this is one. For example, you see this huge volume candle way up here. That is a capitulation at support. So that was a good sign to know that we're moving to higher highs at that point, and that move was over. I think this wasn't just a rise. I think we'll get some more increasing volume as we move down. So you see some of the levels here at 23.6. You see that it coincides right with this support area here, and also probably by the time we get there, this rising pivot. So those would be some excellent spots for that to happen. We break down from there, and then we have the 200-day moving average and all of this down here, this confluence for the last part of the wave down. Let's move over to the VIX futures. VIX futures, we have been watching like a hawk. It's finally starting to pan out. We have this this bullish falling wedge. That's pretty typical for the VIX, and now we're starting to break out from our resistance here, which is the 20. We always end up back under it, and I think this time might be a little bit different. We do have what looks like a inverse. Let's go ahead and mark that head and shoulders, where this is the left shoulder, the head, and the right shoulder. And now we have a neckline about the 21, 20, 22 area. That's very vague there, but we're starting to move up and starting to break out from the wedge here. We do have a 200-day moving average that we have to contend with that has held us down this whole way. So let's see if we actually get some follow through after we touch that and test it. Let's see if we can actually push through it this time. All right, and so let's go ahead and end this off at the SPX options expected move for the week. I will tag that video up above for those who aren't very familiar with it. It does give us a trading, it gives us an idea. It's just kind of like a game field. Like when you're playing football, you have a field, you have boundaries, and you play within those boundaries most of the time. It's probability-wise, you're going to stay within those boundaries, and we've done that over and over and over. Each time we had a correction, it would spike, you know, just underneath, or we'd gap down the next the day. But we would, you see how we stay within it, touch the bottom. We actually broke through the bottom a little bit there. Stay. And what's different about this one? Look at the huge move from last week. I believe we had 51 points to the upside or to the downside. We hit that downside plus much more on a holiday week. And now we are expecting from the options market, we're expecting a plus or minus 115 point move to the upside, or 115 point move to the downside. They don't tell you that it's moving, you know, the market's moving to the upside or the downside. It's just giving you that time for that frame of whether the amount it's going to move. Either way, and I still think we could break through to the downside or to the upside with volatility increasing this hard through these. So probability is we're going to touch one of the ends. So hopefully it's the way that we want it to the downside, but we'll see. You can only play price, okay? So that's it. Thanks for joining us this weekend. Patrons, stick around.